Imagine this. You're staring at your trading screen, the charts flickering like a heartbeat in the dead of night, and suddenly, you feel it, that electric pull, the whisper of opportunity calling your name. But wait, trader, before you hit that buy button, let me pull you into the shadows of one of the greatest market minds who ever lived. Welcome to the untold story of Jessi Livermore, the boy plunger who turned pennies into fortunes and back again, all while guarding a trading rule so profound, so counterintuitive, that even today's Wall Street titans whisper it only behind closed doors. I'm here, speaking directly to you, the aspiring trader, the battle-hardened veteran, the one who's tasted the highs of a winning streak and the gut-wrenching lows of a margin call. Today, we're diving deep into the trading rule professionals never explain publicly, a principle that could redefine how you approach the markets forever. Let me set the scene for you, as if we're sitting in a dimly lit trading floor from the early 1900s, the air thick with cigar smoke and the clatter of ticker tapes. Jessi Livermore wasn't born into wealth. He was a scrappy kid from Massachusetts who ran away at 14 to chase the dream in Boston's bucket shops. Those were the wild west of trading places where you bet on stock prices without owning a single share, like a casino rigged against the house. Livermore honed his edge there, reading the tape like a psychic reads palms, predicting moves before they happened. But it wasn't just about spotting patterns. It was about understanding the human soul entangled in the market's web. He amassed millions by his 20s, lost it all, rebuilt, and repeated the cycle, each time emerging wiser, more scarred. His life was a cinematic epic of triumph and tragedy, bankrupting himself multiple times, yet pulling off legendary trades like shorting the 1,929 crash and pocketing over $100 million in today's dollars. What drove him? Not greed alone, but a relentless pursuit of mastery over the psychological beast that is trading. Now, picture this paradox. In a world obsessed with action, buy low, sell high, diversify, hedge, there's a rule that flips the script entirely. Professionals know it, live by it, but they never explain it publicly. Why? Because admitting it would shatter the illusion that trading is a constant grind, a daily battle. It would reveal that the real edge isn't in doing more, but in mastering the art of restraint. This rule isn't about flashy indicators or algorithmic wizardry. It's rooted in the raw, emotional core of what makes markets move: fear, greed, hope, despair. And Livermore? He embodied it, even as it tormented him. In his pseudonymous memoir, Reminiscences of a Stock Operator, he hints at it through veiled stories, but never spells it out. That's because true pros guard their psychological arsenals like state secrets. They don't want the masses catching on, diluting the edge. As we peel back the layers, think about your own journey. Have you ever forced a trade just to feel alive, only to watch it unravel? That's the setup, trader, the context where this hidden rule emerges as a lifeline. Livermore's philosophy teaches us that markets aren't random. They're a reflection of collective human psychology. He said, the stock market is never obvious. It is designed to fool most of the people, most of the time. Tie that to today. In our era of 24/7 news, meme stocks, and crypto frenzies, we're bombarded with noise. Social media screams, buy now, while algorithms prey on our impulses. But Livermore's insight? Cut through the chaos by embracing what pros won't say aloud. It's about timing, not just in entries and exits, but in the spaces between the pauses that build empires. Let me share a glimpse of Livermore's mindset. He viewed trading as a game of patience, where the biggest wins come not from hyperactivity, but from alignment with the market's natural flow. Modern traders, you chase every tick, every tweet from Elon Musk, but Livermore would urge you to step back, observe, and wait for the stars to align. This isn't passive investing, it's strategic inaction, a rule that separates gamblers from legends. Emotionally, it's brutal fighting the urge to act when boredom creeps in, or fear of missing out gnaws at you. Practically, it means preserving capital, avoiding unnecessary risks. Psychologically, it's liberation from the market's emotional chains. What would you do if you knew this rule could have saved your last bad trade? Comment below. What's the one rule you've discovered that changed your trading game? I'd love to hear your stories. They fuel this community of market warriors. But we're just scratching the surface. This opening sets the stage for the deeper dive, the inner turmoil that every trader faces when the market tempts and teases. In the next section, we'll explore the inner conflict, or market paradox that this rule directly confronts, pulling you further into Livermore's world. Here's the brutal truth most traders never admit out loud. The market is not trying to make you rich, it's trying to make you act. Trader, let me speak straight to your soul for a moment. You've felt it, haven't you? That gnawing tension between wanting to do something, anything, and the quiet voice inside saying, wait, it's the single most uncomfortable feeling in trading. End quote. And it's exactly where this hidden rule lives. The paradox is this: the more desperately you want to be in the game, the more the market punishes you for showing up at the wrong time. And yet, the moment you finally stop forcing trades, the setups you've been praying for suddenly appear almost mockingly perfect. Picture yourself right now. The market has been drifting sideways for weeks. Your watch list is dead. Your P&L is flat. Social media is screaming about the next 10x moonshot. Your group chat is buzzing with screenshots of green candles. And every fiber in your body is screaming, do something. Don't miss this. That's the inner conflict Livermore mastered and suffered through his entire career. He called it sitting tight. But make no mistake, sitting tight is psychological warfare. Most traders believe success comes from being right more often. Livermore knew better. He understood that being right at the wrong time is the same as being wrong. The real war isn't against the market, it's against yourself. You fight boredom, you fight FOMO, you fight the fear that if you don't act now, the train will leave the station forever. And the moment you cave and take a mediocre setup just to feel productive, that's when the market turns on you like it knew you were bluffing. This is the paradox professionals exploit but never explain publicly. The less you trade, the more you make, provided you only trade when everything lines up. It sounds insane until you live it. Livermore once wrote, there is a time to go long, a time to go short, and a time to go fishing. Most traders only hear the first two parts. The third part, go fishing, is where fortunes are quietly built or silently destroyed. Think about your last losing streak. Was it really bad analysis? Or was it you forcing trades during a period when the market refused to trend, refused to give you a clear edge? I've seen it hundreds of times. Traders who were brilliant in strong trends become gamblers in chop. They overtrade, overleverage, overexplain. They tell themselves, I'm staying active, but what they're really doing is feeding their ego while bleeding their account. Livermore saw through that illusion early. He realized that inactivity is not laziness, it's discipline. It's respect for the tape. It's reverence for the one thing you can never control, timing. Emotionally, this conflict is exhausting. Your mind plays tricks. It says, if you don't trade today, you're falling behind. It replays every missed winner from the past month. It whispers that real traders are always in the arena. But Livermore would look you in the eye and say, the arena is full of corpses. The survivors are the ones who knew when to leave the ring. Now let me ask you directly, because this moment matters. When was the last time you chose to do nothing, even though every impulse screamed to act? Be honest in the comments below. Right, the last time I forced a trade instead of waiting, it cost me. And tell us the number. No shame here, just truth. Your story might be the exact wake-up call someone else needs today. This inner war, the push and pull between action and restraint, is what sets the stage for the psychological trap that almost every trader falls into. In the next section, we're going to name that trap, expose how it works, and show why even seasoned professionals still get caught in it from time to time. Listen closely, trader, because the deadliest trap in this game isn't a bad trade. It's the one your own mind sets for you day after day without mercy. You know the feeling all too well, don't you? That itch under your skin, the one that starts as a whisper and builds to a roar. Act now, or regret it forever. It's the core problem every trader faces, the psychological trap of premature action, the siren song of the market that lures you into trades before the evidence is in. And once you're in, it doesn't just cost you money. It erodes your confidence, your edge, your very will to fight another day. I'm talking to you right now, the one refreshing your platform every 5 minutes, scanning for any sign of life in a flat market. This trap isn't random. It's engineered by your brain's wiring, amplified by the market's chaos. Let me paint the picture vividly, like a scene from a noir film where the hero knows the door's a trap but walks through anyway. You're up late, coffee gone cold, charts glowing in the dark. The indices are choppy, no clear trend in sight. Your analysis says, wait, the volume's low, the momentum's absent, the big players are on vacation. But then, a tiny breakout flickers on your screen. A stock you've been eyeing jumps 2% on flimsy news. Your heart races. This could be it. Your mind screams, the one that turns the week around. You ignore the rules you swore by, the need for confirmation, the alignment of multiple signals. You hit enter. And within hours, it's reversing, taking a chunk of your capital with it. Why? Because you fell into the trap, the compulsion to trade for the sake of trading, to soothe the anxiety of inaction. This is no abstract theory, it's the emotional quicksand that swallows dreams. Psychologically, it's rooted in our evolutionary baggage. Humans are wired for survival through action. In the savannah, hesitation meant death. In the markets, it's the opposite. But your amygdala doesn't know that. It floods you with cortisol, urging do something to escape the discomfort of uncertainty. Add modern pressures. The dopamine hits from social feeds showing others wins. The pressure to justify your screen time to skeptical friends or family. What do you do all day? They ask. You can't say, I waited. Waiting feels like failure. So you trade, you overcommit, you chase, and the trap snaps shut. Livermore lived this nightmare in Technicolor. Early in his career, fresh off bucket shop wins, he carried that hot hand into the big leagues. He forced positions during the 1907 panic, convinced he could outsmart the downturn. Instead, he got margin called, wiped out, humiliated. In reminiscences, he confesses, I thought I was right, but the market was not ready to go my way. That wasn't just bad luck. It was the trap in action. He later called it operating on hope, the delusion that your conviction alone bends reality. Hope isn't analysis. It's the gap between what you wish and what the tape shows. Professionals spot it coming because they've been buried by it. They know the core problem isn't market unpredictability. It's our inability to tolerate the void between setups. We fill it with noise, bad trades, revenge trades, just this once, exceptions. Practically, this trap manifests as overtrading, too many positions too soon, with stops too tight or none at all. Emotionally, it's a slow bleed. Each loss chips away at your self-trust, turning you into a reactive machine rather than a strategic force. I've watched traders, sharp as tacks, devolve into gamblers because they couldn't name this beast. They blame the market, the brokers, the news. But deep down, they know the enemy is the urge to act when the moment isn't ripe. Livermore's philosophy cuts through here like a knife. The game taught me the game, and it cost me everything to learn it. He learned that the tape doesn't care about your timeline. It moves on its own rhythm. Modern traders, buried in apps and alerts, amplify the trap tenfold. Every ping is a temptation. Every algorithm a pusher. Storytelling time. Remember the dot-com bubble. Traders piled into tech stocks on hype alone, ignoring the lack of earnings, the overvaluation. When it burst in 2000, trillions vanished, not because the market was wrong, but because so many fell for premature euphoria. Fast forward to GameStop 2021. The squeeze was real, but how many jumped in mid-frenzy, only to get shaken out? That's the trap, entering on emotion, exiting on regret. And now, trader, turn the mirror on yourself. What's your personal flavor of this trap? The revenge trade after a loss? The FOMO buy on a hot tip? Pause the video right here and jot it down. Then comment below. My biggest psychological trap is, share it, no judgment, just solidarity. We're all in the foxhole together. But naming the trap is only the first step. Understanding how Livermore saw through it changes everything. In the next section, we'll shift to his unfiltered perspective on this mess, the lens that turned his pain into power. If Jessi Livermore could sit across from you right now, trader, he wouldn't sugarcoat it. He'd look you dead in the eyes and say, the market doesn't owe you a living. It owes you nothing. And the sooner you accept that, the sooner you stop being its victim. Let me bring you inside Livermore's mind for a moment, because this is where the entire game changes. He didn't see the market as a puzzle to solve or a casino to beat. He saw it as a living, breathing organism made of millions of human decisions, fears, greeds, and delusions. And the single most important thing he learned after being burned again and again, the market is never wrong. You are. That one sentence, the market is never wrong, is the cornerstone of his perspective on the psychological trap we just exposed. Most traders hear it and think it's arrogant or defeatist. Livermore meant it as liberation. When you finally accept that the tape, the price action, the volume, the trend, they are the final judge, then you stop arguing with reality. You stop forcing your opinion onto the market. You stop trading your ego. You start trading what is. Livermore's lens was brutally simple. The market tells you what it's going to do long before it does it, but only if you're willing to listen instead of talk. He spent hours, days, sometimes weeks just watching the tape, not trading, not thinking about what he wanted to happen, but observing what was actually happening. He called this reading the tape like a book, and the hidden rule professionals guard so closely. It flows directly from this mindset. Never take a position until the market has already shown you through unmistakable, repeated confirmation that it agrees with you. In other words, don't anticipate, confirm. That's the pivot point most traders miss. They anticipate breakouts, anticipate reversals, anticipate news. Livermore waited for the market to anticipate him. He said, I never use my own opinion. I discount my own opinion. He understood that your brain is the single biggest source of noise in your trading. Your hope, your fear, your need to be right, they all distort the picture. The only thing that doesn't lie is the price itself and the way it behaves under pressure. Think about how radical this is in today's world. We're drowning in opinions, analysts, YouTubers, Twitter threads, Reddit threads, Discord pumps. Everyone has a thesis. Livermore would have laughed. He'd say, theories are cheap, tape is expensive. He learned the hard way that being early is the same as being wrong. Being right too soon costs the same as being wrong forever. One of his most famous lines captures this perfectly. It never was my thinking that made the big money for me. It always was my sitting, not trading, not analyzing, sitting and waiting for the market to tip its hand. That's the perspective shift. Action is not the goal. Alignment is the goal. And alignment only happens when the market has already started moving in the direction you're considering, when the evidence is so overwhelming that even your doubting mind can't argue anymore. Emotionally, this perspective is both terrifying and freeing. Terrifying because it means giving up control, freeing because it means you no longer have to guess. You just have to wait for the market to stop guessing and start committing. Livermore went bankrupt multiple times before he internalized this. Each wipeout taught him the same lesson. When you fight the tape wins. When you wait for the tape to fight for you, you win. Practically, his view translates into ruthless selectivity. He wouldn't touch a stock unless it was already acting strong in a strong general market or weak in a weak market. He looked for line of least resistance. He wanted the path of momentum already cleared, not obstructed by indecision. Modern traders chase mean reversion setups, contrarian plays, bottom fishing. Livermore would have called most of that gambling. He traded with the wind at his back, not into it. Let me leave you with one vivid image from his own words. The game of speculation is the most uniformly fascinating game in the world. But it is not a game for the stupid, the mentally lazy, the person of inferior emotional balance, or the get-rich-quick adventurer. They will die poor. That's not arrogance. That's a warning born of scars. So tell me, trader, right now, in this moment, are you still trying to outsmart the market, or are you finally ready to let the market tell you what to do? Drop a comment below. I'm still fighting the tape on, and name the one thing you keep forcing. Be brutally honest. This is where change starts. But knowing how Livermore saw it is only half the battle. In the next section, we're going to step into a real moment from his life, a story that shows exactly what happens when you ignore this perspective and what happens when you finally embrace it. Let's step out of theory and into the smoke-filled rooms of 1929, because this is the moment when Jessi Livermore's hidden rule was forged in fire, and the entire world watched a legend almost destroy himself before he finally learned to obey it. Trader, close your eyes for a second and transport yourself back to the roaring 20s. The market is a runaway train, stocks doubling, tripling, people borrowing on margin to buy more, euphoria everywhere. Everyone's a genius. Everyone's rich. And right in the middle of it stands Jessi Livermore, already a millionaire many times over, but haunted by the ghosts of past blow-ups. He's watching the tape, he's reading the behavior, and something doesn't feel right. By the summer of 1929, Livermore starts to see cracks. The tape is telling a different story than the headlines. Volume is drying up on rallies. Leadership is narrowing. The big operators are quietly distributing, selling into strength while the public piles in. Most men would have ignored it, ridden the wave, cashed out later. Livermore didn't.